Have you ever stopped to ponder what it truly means to be wealthy? The concept of wealth is often misconstrued as just a pile of banknotes, a collection of luxury cars, or a portfolio of high-rise buildings. But wealth, my friends, is a much broader concept. It's an ensemble of financial, intellectual, spiritual, and emotional riches. It's not just about having a hefty bank balance, but also about possessing a rich mind, a rich heart, and a rich spirit. Let's break it down. Financial wealth is what we most commonly perceive as wealth. Assets, cash, investments. It's the tangible part of wealth, the one that can buy you material comforts. But is that all there is to wealth? Certainly not. Intellectual wealth is the knowledge and wisdom you acquire over time. It's the books you've read, the skills you've mastered, the experiences you've had. It's the wealth that no one can take away from you. Spiritual wealth, on the other hand, is a bit more elusive. It's about having a sense of purpose, a connection to something greater than yourself. It's about inner peace, contentment, and joy. It's the wealth that gives meaning to your life. And finally, emotional wealth. It's the relationships you've nurtured, the love you've given and received, the empathy and compassion you've shown to others. It's the wealth that makes you truly human. Now, you might wonder why we're talking about all these different types of wealth when our focus is financial wealth. Well, it's because these different aspects of wealth are interconnected. Your financial decisions are influenced by your intellectual, spiritual, and emotional wealth, and vice versa. So, yes, we will be focusing on the financial aspect of wealth in this series. We will talk about how to grow your money, how to invest it wisely, how to avoid financial pitfalls. But remember, financial wealth is just one piece of the puzzle. It's important, yes, but it's not everything. Understanding wealth begins with the realization that it's not just about money. Let's delve deeper into the financial aspect. Wealth isn't just about having a lot of money. It's about having a lot of options. In the grand scheme of things, wealth is a lot more than just the numbers on your bank account. It's about having the freedom to make choices, to take chances, and to live life on your own terms. It's about the ability to take that dream vacation, to support the causes that you believe in, or to retire early and spend more time with your family. Wealth, in its true essence, is freedom. Now, how do we attain this wealth, this freedom? There are three key components to building wealth: income, savings, and investments. Let's delve into each one of them. Firstly, income. This is your starting point, your stepping stone to wealth. It's what you earn from your job, your business, or any other source of regular earnings. Your income is the fuel that drives your wealth-building journey. But remember, it's not just about earning more. It's about making the most of what you earn. This brings us to our second component, savings. Now you might think, but I'm earning quite a lot. Why do I need to save? Well, the answer is simple. It's because the future is unpredictable. You never know when you might face an unexpected expense, lose your job, or encounter a financial emergency. That's where savings come in. They act as your financial safety net, protecting you from financial setbacks and helping you maintain your financial stability. But saving alone isn't enough. If you're only saving, you're missing out on a major wealth-building opportunity. That's where our third component comes in: investments. When you invest, you're putting your money to work. You're allowing it to grow and multiply over time. Investments are the seeds that you plant today to reap the fruits of wealth tomorrow. It could be in the form of stocks, bonds, real estate, or any other form of asset that appreciates over time. The key is to invest wisely and patiently, and let the power of compounding do its magic. Remember, building wealth is a journey, not a destination. It's about making consistent efforts, making smart decisions, and adopting a long-term perspective. It's about understanding that wealth isn't just about earning more, but also about saving more and investing wisely. So, where do you stand on your wealth-building journey? Are you earning enough? Are you saving enough? Are you investing wisely? If not, it's never too late to start. Start today, start now. Because the journey of 1,000 miles begins with a single step. Remember, wealth isn't just about how much you earn, but also about how much you save and invest. The secret to wealth lies in a simple yet powerful concept: compounding. Compounding in the financial world is often compared to a snowball rolling down a hill. Just as the snowball grows larger and faster as it rolls, so too does the value of your investment with the power of compounding. It's a simple principle, but its effects are profound. Let's imagine you're planting a tree, and each year this tree doubles in size. After the first year, you have 2 trees. After the second year, those 2 trees become 4. By the third year, you're looking at 8 trees. This is the essence of compounding. It's growth upon growth. Now, transpose this idea to your money. If you invest a small sum and leave it to grow, it'll increase not just by the original amount you put in, but also by the interest or returns it has already generated. It's a cycle that feeds upon itself. Imagine you invest $100 at a 10% annual interest rate. After 1 year, you've earned $10 in interest. But here's where the magic happens. In the second year, you're not just earning interest on your initial $100, you're earning interest on $110. That's an extra buck for doing nothing more than waiting. And as time goes on, this effect becomes more pronounced. This is why compounding plays such a crucial role in wealth creation. It's not about making a quick buck, but about patiently allowing your wealth to grow over time. The longer you let your money compound, the more explosive the growth. Compounding is a force that can work for anyone, regardless of their financial status. It's not about how much you start with, but how long you let it work for you. With patience and time, even the smallest investments can grow into a substantial sum. Remember, compounding doesn't discriminate. It works the same for a penny as it does for a pound. It's about making your money work for you, letting each dollar become your employee, earning you more dollars in return. Compounding is the magic that can turn small savings into a big fortune. To build wealth, you must learn to spread your eggs into different baskets. This old adage essentially captures the essence of diversification, a crucial strategy in wealth creation. But why is diversification important, and how exactly does it contribute to wealth accumulation? Let's delve in to find out. Imagine you've invested all your money in one single company's stock. If that company performs well, your wealth increases. But what if the company faces a downturn? Your entire investment is at risk. This is where diversification comes into play. By spreading your investments across different assets, you reduce the risk associated with putting all your eggs in one basket. Now, when we talk about diversification, we're not just talking about investing in different companies. It's about investing in different types of assets altogether. These can include stocks, bonds, real estate, mutual funds, and more. Let's take a moment to understand each of these. Stocks represent ownership in a company. When you buy a company's stock, you're buying a piece of that company. You become a shareholder and stand to benefit from the company's profits. However, stocks can be volatile and are subject to market risks. Bonds, on the other hand, are like loans that you give to a company or government. In return, you receive a fixed interest over a specific period. Bonds are generally considered safer than stocks, but the returns are also typically lower. Real estate involves investing in property. This could be residential, commercial, or rental properties. Real estate can provide a steady income stream and potential appreciation over time. However, it also requires significant capital and management. Mutual funds are a way to invest in a diversified portfolio without having to pick individual stocks or bonds. A fund manager does this for you, spreading your investment across a range of assets. Each of these investment avenues has its pros and cons, and their performance can vary under different market conditions. That's why it's crucial to have a mix of these in your portfolio. This way, when one asset class underperforms, the others can potentially make up for it. But remember, diversification isn't a one-size-fits-all strategy. It depends on your financial goals, risk tolerance, and investment horizon. A young investor might have a higher risk appetite and can afford to have a larger portion of their portfolio in stocks. A retiree, however, might prefer the safety of bonds or the steady income from real estate. To sum it up, diversification is about spreading risk and seizing opportunities. It's about ensuring that your wealth doesn't depend on the success or failure of a single investment. It's about creating a balanced portfolio that can weather the ups and downs of the market. Diversification is not just about minimizing risk, but also about maximizing opportunities. By diversifying, you're not just protecting your wealth, you're also positioning yourself to grow it. So the next time you think about your investment strategy, remember to spread your eggs into different baskets. Building wealth is a marathon, not a sprint. This is a truth we must all internalize when we venture into the world of wealth creation. Discipline and patience aren't just virtues here. They are the very keys to the treasure chest. Let's talk about discipline first, particularly in the context of saving and investing. Imagine you're a ship captain. Your savings are your ship, your investments are your sails, and the market winds can be fickle. Without discipline, your ship could end up adrift, or worse, wrecked. Discipline is what keeps your hands steady on the wheel, guiding your ship towards your wealth goals. Discipline is about consistency. It's about saving a fixed portion of your income month after month, regardless of how tempting it might be to splurge. It's about investing regularly and wisely, even when the markets are turbulent. It's about resisting the allure of get-rich-quick schemes and sticking to your financial plan. Now, let's shift to patience, another critical aspect of wealth creation. Patience is the calm you maintain as your ship navigates choppy waters. It's the belief in your journey, even when the destination seems far away. Wealth creation is not an overnight event. It's a process that unfolds over years, even decades. It's about understanding that investments need time to grow, that the magic of compounding works best when given ample time. Patience is about holding on to your investments in a downturn, trusting in their long-term potential. In a world that thrives on instant gratification, practicing patience can be challenging. But remember, the most beautiful trees take the longest to grow. The same goes for your wealth. To sum it up, discipline and patience are the twin engines propelling your ship towards the shores of wealth. Without them, your journey could be fraught with aimless drifting and missed opportunities. Remember, Rome wasn't built in a day, and neither is wealth. So hold your course, stay disciplined, be patient, and watch your wealth grow. The path to wealth is fraught with traps. Knowing how to avoid them is half the battle won. Embarking on the journey to financial independence, you'll encounter numerous pitfalls that can derail your progress. Let's explore some of these common financial mistakes and provide tips on how to avoid them. First, there's the pitfall of overspending. In a world of instant gratification, it's easy to fall into the trap of living beyond your means. Whether it's splurging on the latest tech gadget or indulging in extravagant vacations, overspending can quickly deplete your resources and hinder your progress towards wealth. To avoid this pitfall, craft a realistic budget that accounts for your income and expenses, and stick to it. Prioritize needs over wants, and remember that delayed gratification can lead to long-term financial success. Next, we come to high debt. While debt can be a useful tool when used responsibly, excessive debt can become a financial nightmare. High-interest debt, particularly from credit cards, can accumulate rapidly and leave you struggling to keep up with payments. To steer clear of this pitfall, aim to keep your debt levels manageable. Pay off your credit card balance in full each month and avoid unnecessary borrowing. If you're already in high debt, consider seeking professional advice or adopting a debt reduction strategy like the snowball or avalanche method. Another common pitfall is not planning for emergencies. Life is unpredictable, and unexpected expenses can arise at any time. Without an emergency fund, these unforeseen costs can force you into debt or cause you to dip into your savings. To evade this pitfall, start building an emergency fund that can cover 3 to 6 months' worth of living expenses. This fund acts as a financial safety net, helping you navigate through unexpected financial storms without derailing your journey to wealth. Lastly, there's the pitfall of neglecting long-term financial goals. Many people focus on short-term financial needs and forget to plan for the future. Whether it's retirement, buying a home, or funding your child's education, these long-term goals require careful planning and consistent saving. To sidestep this pitfall, set clear, achievable financial goals and make regular contributions towards them. Consider employing the power of compounding by investing these savings wisely. In conclusion, the path to wealth is indeed filled with potential pitfalls. However, by avoiding overspending, managing debt, planning for emergencies, and focusing on long-term financial goals, you can navigate these challenges successfully. Remember, financial success is not just about making money, but also about managing it wisely. Avoiding these financial pitfalls can put you on the fast track to wealth. Knowledge is power, especially when it comes to wealth creation. In our journey to mastering the principles of wealth, we've explored the fundamentals, the power of compounding, portfolio diversification, discipline, and patience, as well as the art of avoiding financial pitfalls. But none of these elements would play their part effectively without the bedrock of financial education. You see, financial education is not just about learning how to balance a checkbook or understanding the difference between a stock and a bond. It's much more than that. It's about understanding the economic world around us, learning how money works, and most importantly, how to make it work for us. Think about it. Would you rather walk into a boxing ring blindfolded, or would you prefer to step in with a clear vision of your surroundings and a strategy in mind? I bet you'd choose the latter. The same principle applies to wealth creation. Without financial education, we're essentially stepping into the ring with our eyes closed, hoping to land a lucky punch. So, where can we acquire this crucial knowledge? Well, there are countless resources available out there. From books written by financial gurus, to online courses, webinars, podcasts, and even YouTube channels dedicated to the subject. And let's not forget, there's a wealth of wisdom to be gleaned from the experiences of successful entrepreneurs and investors. But remember, financial education is not a one-time event. It's an ongoing process. The economic landscape is ever-changing, and so too should our knowledge. That's why it's important to stay up to date with the latest trends, strategies, and regulations. The beauty of financial education is that it's not only beneficial for wealth creation, but it also helps us navigate through life's financial challenges, making us more resilient and prepared. And here's the kicker. Financial education doesn't just benefit us individually, it benefits society as a whole. A financially literate population is a more secure, prosperous, and stable one. So, whether you're an aspiring entrepreneur or just someone looking to secure a comfortable future, remember this. Investing in your financial education is the best investment you can make. Let's revisit the principles of wealth we've covered today. First, we delved into the question of wealth, exploring its fundamental nature. Wealth isn't just about accumulating money, but rather, it's about achieving financial freedom. It's about having the resources to live life on your terms, to make your own choices, and to secure your future. Next, we uncovered the power of compounding. This is the magic that turns small, consistent investments into a large fortune over time. It's not about getting rich quick, but about building wealth slowly and steadily. It's the snowball effect in action, where your wealth grows exponentially over time, not linearly. We then discussed diversifying your portfolio. This is the strategy of spreading your investments across various assets to mitigate risk. It's about not putting all your eggs in one basket. It's about finding the balance between risk and reward, and making sure that a single failure won't wipe out your entire wealth. Moving on, we emphasize the role of discipline and patience. Building wealth is a marathon, not a sprint. It requires consistent effort, making smart decisions and resisting the temptation of quick, risky gains. It's about playing the long game and understanding that true wealth comes from patience and perseverance. We also highlighted the importance of avoiding financial pitfalls. These are the mistakes and traps that can derail your wealth-building journey. They include things like high-interest debt, poor spending habits, and risky investments. It's about being aware of these pitfalls and taking steps to avoid them. Finally, we stressed the importance of financial education. Knowledge is power, and in the world of wealth building, it's your most valuable asset. It's about understanding how money works, how to make it work for you, and how to protect and grow your wealth. Mastering these principles is your first step towards building lasting wealth.